So next up, we got the panel, Bridging the Gap, Helping Traditional Finance, Understanding Power and Importance of NFT. We have Andrew, James, Joanna. Please give them a round of applause.
Good afternoon, everybody. My name is Andrew Holland with Clearwater Digital Partners, along with my fellow panelists, James and Joanna. Unfortunately, Suzanne was unable to join us today. Thanks for coming to Bridging the Gap, helping traditional finance understand the importance and power of NFTs. You'll hear a little bit more about our backgrounds and how we think about this space. What we're hoping by the end of this panel is that you'll hear from industry professionals like us that are raising capital, making investments in this space, how we think about NFTs. You know, digital assets, of course, NFTs is a particular sector of the digital asset space, and give you a little bit more clarity about when we raise capital and we're putting other people's money to work, what are we looking for in the NFT space? Why do we believe that there's so much potential with NFTs? So to start, James, if you want to tell us a little bit more about yourself and what your company's focus is.
Yeah, sure. Hello, everyone. This is James Wu, founder and CEO of DFG. So we've been a crypto investor for the past 7 years. So we started a company back to 2015. We don't have any outside LP, so 100% owned by my family. So we start with $20 million, investing into a bunch of active first, like Circle, LedgerX, Bizzle, Brave, and a few others. Then in 2017, 2018, we started investing into layer 1 protocols, including Polkadot, Solana, and a few others. We invest into more than 100 different projects so far, and currently we are managed like around $1 billion. We are actively looking for different, infrastructure as well as the user applications to invest these days.
Yeah, so I'll be the next. Hello, everybody. I'm Joanna, CEO and co-founder of JSquare. I've been in this space for around 6 years so far, and I used to be CIO of DFG. And right now, same as DFG, my found JSquare is also we don't raise any outside fund, and it's totally self-funded by ourselves. And the AUM right now is $150 million in total. So the focus is kind of more mass adoption level. So we were pretty heavy in GameFi, NFT, and a lot of other mass adoption level projects to bring in the Web2 traditional users into the Web3 space. And so far we have invested around 60 projects in total.
Thank you, Joanna. So as I said, I'm Andrew Holland with Clearwater Digital Partners, one of 4 partners and co-founders with Clearwater Digital Partners. And we are an investment management company focused on exclusively investing in digital assets. So unlike James and Joanna, we do raise capital, have limited partners. Our flagship fund, Clearwater Opportunity Fund, is a digital asset hedge fund. But it's a little bit different than some of the other hedge funds that you see out there in that we don't just invest in Bitcoin, we don't just invest in Ethereum. As a matter of fact, we don't just invest in the top 25 market cap adjusted digital assets. We cast a very wide net inclusive of NFTs. And so for us, we like to think of ourselves, if you're familiar with the traditional financial space, kind of like a macro fund, a do anything, go anywhere type approach. Now, having said that, given all of our backgrounds, the 4 founders in the traditional finance space, when we think about portfolio construction, and we believe it's particularly important in digital assets and in NFTs, we have a strict adherence to modern portfolio theory. So we take concepts that have been well accepted in the traditional finance space for 80, 100 years, they've been well tested, they've been well proven, and we apply it to the digital asset space. Risk management, diversification, appropriately sizing positions, so if they don't turn out the way you expect them to turn out, you're still going to be able to serve your limited partners well. And that's actually what piqued our interest in the NFT marketplace, because if you look at NFTs, large swaths of that marketplace not only exhibit the opportunity for positive return, but they also, during certain market conditions, tend to act independently of the broader digital asset space. And so for us, again, given our backgrounds, it was kind of this perfect marriage between Nobel Prize-winning concepts from the traditional space, modern portfolio theory, diversification, being applied to a less well-known, maybe a little bit elusive, and quite volatile space. And why is that important for us? Well, of course, we're managing other people's money, and it's important to us to think about that risk management aspect. And it's turned out really well for us. Since our inception, which was September of 2022, through April, we're in the top decile of performing hedge funds that give their limited partners directional exposure, beta exposure to the space. Now, a lot has happened since April 30th. We tend not to do mid-month performance, but once May and June come out, we're confident we're going to continue to be in that top performing side. If you have the opportunity, our chief investment officer, who was 5 years at Goldman Sachs prior to this, did a LinkedIn profile that talked about why is risk management so important to us? Why is it so important to the broader space and helping it grow? And one example for us, and we have internal models that we're looking at, kind of risk models, 2 or 3 months ago, when we were still kind of in a bull market, which has very much changed, what we were seeing wasn't adding leverage or being more aggressive in the space. We were actually raising our cash position because we were seeing things very differently than the broader market was seeing them. And we actually put some derivatives on the books that protected us on the downside. And that has served us very, very well in the last couple of weeks. And so again, a common theme for all of us and what we're going to be talking about is there's a lot going on in the NFT marketplace. And I don't want to say there's a lot of hype, but it's very volatile. There's a lot of projects. How do you know which ones do you go in, which ones don't you go in? And we'll talk more about that throughout the panel. Kind of focusing within that space, James, can you tell us why GameFi and NFTs are an investment focus of yours?
Yeah, absolutely. I think what we all do, both investor and the founder of the project, doing is really about adoption for the crypto industry. So the ultimate goal for us is to bring more people to understand this and use this, right? So when we talk about adoption, GameFi and NFT is probably the best way in the crypto industry to do so. Because just imagine for DeFi, you need to have very deep understanding about the financial industry, then you can use this kind of DeFi product. So it's limited the number of people who can participate in this. But with GameFi and NFT, it's really easy. Everyone play games, right? Everyone can easily understand what is an NFT and participate into it. So it's much easier for people to understand it and join the industry. So it's a good way for us to do the adoption. Just imagine if I told a non-crypto people about the difference between the layer 1 protocol, what is Ethereum, what is Solana, what is Polkadot. It would be very hard for them to understand this. And maybe, even set a barrier for them. Okay, this is something I don't understand, I don't want to join. But if I told them, hey, this is an NFT, do you like it? Do you want to buy it? Do you want to own it? Then, it's easy for them to understand. Then, we can have more people to join the industry. For example, for the last bull run, I think, what NFT and GameFi are doing a very, very good job is we bring more people on board, which is super important for this industry. So this is why we, as an investment firm, invest into the adoption, then we invest into GameFi and the NFT space. And Joanna, what do you think?
Yeah, actually, I totally agree with you over this point. And just to add on some more small, to break it down a little bit. So I think in terms of GameFi part, we were very heavy on this, not only because of the figures that it already achieved. We can see that during the last bull run, there were projects like Axie, like StepN, whose FDV is over $10 billion in AUM, $10 billion in FDV. So this figure already shows that the popularity has come. Yeah, and so this is the first thing. And the second, I think, is the timing. So actually, the pandemic in the last few years has totally changed people's lifestyle. So a lot of people in some developing countries, in some commodity exporting countries, they are facing some stagnant progressing in terms of the economic growth. So people have to shift their lifestyle to make a living. And so GameFi projects is actually a way for them to make a living. And so not only you can make a living by like playing games, but also you can play for fun as well. So that's how GameFi projects engaged in more like Web2 traditional users into this industry. And so all in all, that led to the popularity of GameFi projects in the last bull run. And I think the underlying reason, as James has already mentioned, is that GameFi projects has the ability to bring in a lot more traditional users. And this is actually the same logic as what NFT is. And so NFT, at its surface, it can bring in a lot of traditional users because people can understand very easily about what an NFT is than what a token is, because you need to understand more what this project is to buy a token. But you can just see an NFT and you understand it very easily. But this is just the surface. But I think what the underlying reason for an NFT is that it will be the fundamental factor for the future metaverse and the future blockchain world. So it actually represents the ownership and the disposal right, the right of disposal, and also some culture behind it. So this is my, that's why I'm so bullish in GameFi projects, especially NFT in the future. And so after, so Andrew, actually I've got a question for you as well. So please talk broadly about how you, as an active manager, as a hedge fund manager, think about NFTs in the context of portfolio construction.
Yeah, thank you, Joanna. So you can imagine some of our limited partners who have been successful in completely different industries outside of crypto, and you start talking about NFTs, the look that they might get on their face. But when we start explaining it in a little bit more detail, their eyes kind of widen, like, wow, that makes a lot of sense. So as I said, we're strict adherents to traditionally accepted concepts in the financial space, modern portfolio theory. It's simply who we are. It's in our DNA, given the background that we all come from prior to starting Clearwater. So for us, fundamentally, two things have to be true for us to even consider an investment. Number one, there has to be an expectation of positive returns going forward for our limited partners. And number two, and just as importantly, there has to be a lack of correlation between a particular investment with the other investments that are in the portfolio. Put another way, there has to be a diversification benefit to putting a particular investment into the portfolio. If you look at NFTs, a lot of the projects and a lot of the opportunities out there, and I know there's a lot of them, but if you due diligence them and you research, and we'll talk more about how we all think about that, they meet both of those criteria. On top of that, we have a really strong adherence to idiosyncratic catalyst-driven trades. So the concept of maybe it's shorter term in nature, but it's something that's going to propel you in the horizon 60 to 70 to 80 days that looks very attractive. In the NFT space, this typically comes in the form of another airdrop for people that originally supported the ecosystem, or maybe a secondary NFT drop that's going to have some value for those that supported it. Why do we like that? Well, to us, it looks something very similar to a dividend in the traditional financial space. Now, companies typically pay dividends on a quarterly basis, and while these types of airdrops represent a one-time special cash dividend, they can be, depending on market conditions, and we've experienced this, as large as 20 to 25%. So think about it. If you're managing other people's money and you're taking a step back and you're trying to analyze, is this a good investment for our portfolio? Is this a good NFT project for our portfolio? They already meet the true criteria that we talked about. Expectation of positive return and a diversification benefit fundamentally have to be true. And now, on top of that, you're looking on the horizon of a potential 20 to 25%, again, depending on market conditions. It gives you that much more comfort that the probability of this particular investment coming to the portfolio is going to be accretive to overall portfolio return versus a detractor, that much easier. It gives you a good margin of safety. And so for us, when we think about NFTs in the broader context of a well-diversified portfolio, that's exactly how we think about it. Kind of delving a little bit more into specifics of NFT projects, James, talk to us about, we've talked very high level thus far, but give us some specifics of when you're looking at a project, what makes one valuable over another? Is it the art? Is it the scarcity? What are you guys looking for that says, that's a good investment for us.
Yeah, sure. I think on the NFT side, I think three things are very important to me. The first is most fundamental level is about ownership. Because whether the NFT store doing the storage on the IPFS or you're just on a random places on AWS, right? If anyone can transfer it to other people, what's the point of it, right? So that's really the key, right? So whether you really own the NFT or not, so that's really something I think I will at least take care. I will at least care about what when I'm going to decide to buy an NFT or not. And also, beyond that, it's about IPs, right? Whether I just buy a picture or I own the IP of this. So this is really about ownership. This is, first thing I will consider. Because if it's not your asset, why should I pay money for it? So that's the fundamental level I will take a look at it. The second is really about utility. Because, Bored Ape is very, I would say they do a pretty good job because they keep adding different utility to the NFT, right? So you can use that to buy the land, you can use that to do a lot of things. So this is really, I would say, the important value of the NFT is it just a picture or does the NFT have the enough utility? For example, in the future, I would say there will be a lot of combination between different GameFi or even metaverse project and NFT. NFT can serve as the the path to different kind of, a GameFi and metaverse project. That would be a very important utility for NFT. Instead of just you are owning a picture, you can have more, rights or power to participate into games and other things. So that is really creating an added value to this NFT. I would say that's the second level. The third level, I would say it's more about a consensus, because you are basically, the NFT basically setting, the category for different people. Just imagine if you're trying to, that's more like a social level. If you're trying to make different friends, you need to find the people with have the same hobby or have the same, you can share the common language that you guys can talk about. Then you can make friends, right? NFT can serve the same functionality as well. Cause basically, just taking an example in our firm, Joanna and I work together, but he buy a lot of Bored Ape, but I buy a lot of Azuki. So so we never talk about this. We talk about other projects we invest, but we never talk about this because on this sector, we don't share the the common interest, right? So it's a little bit interesting, but just imagine on a social level, I'm a big fan of Bored Ape. You are a big fan of Bored Ape, we can make friends. So that's set up a category for different people to hang out together. That's also the value of the NFT, I think, on a much higher level. So from the bottom, which is ownership, then the utility, the highest I would say the consensus. So when I buy an NFT or not, I think these three are the important criteria when I make the decision. And Joanna, you can talk about your idea.
Yeah, I partially agree with your point. And for me, in terms of value proposition, I think 70% of the value comes from community, culture, and utility, and 30% comes from artist and creation itself. So there's a big gap. And let's just take take Muffers as an example. It's a project. It's also an NFT collection. So it actually doesn't have a very reputable artist behind it or any biggest great design or beautiful UX or something like this. But actually it creates a kind of community to connect the people with the biggest creativity and distinctive. And it also creates a distinctive community group with each other. And just like James has mentioned, and different kinds of NFT collections just accumulates different kinds of person in this world, and which is kind of a culture cultivation. And the other thing is the utility. The utility is what's most important about utility is consistency. So not only when you purchase an NFT collectible, you not only own this piece, but also you own its commercial value and the potential future commercial value behind it. like I purchased Bored Apes, and it constantly like gives me a lot of like NFT drops, and I can give like primary access to its future ecosystem, and I can get better access to its ecosystem in the future. And I think that's what is the most important behind it, the value behind it. So in terms of the artist side, actually a few months ago I was a collector of the art collection as well, just like the Robert Ellis. He's a collector of Robert Ellis as well. But Robert Ellis and Peck used to create legendary stories in the South Bay auction, but it is not that consistent. So I think the reason behind it is that because it doesn't create the like extensional utility behind it, but only it extends. It only like stores a lot of value behind the masterpiece and the master itself. So this is my understanding.
Yeah, I want to add to actually what you both of them said. I couldn't agree more. We look at it very similarly when we're looking at a project. Two things: a sense of community, a sense of belonging. As we've all probably experienced, that's so much more powerful than the potential for increasing your net worth. Certainly all of us want to do that, but the projects that have been the most successful exhibit two things. A sense of community is really important, and people aren't in the project just to make money. They're there because they're able to talk to people across the world on Twitter and Discord, and it's almost an online presence for them. And they get more people in the community. And I think if you look at, that's what Bored Ape Yacht Club has done so well, is it's created an incredible sense of community. Ape Fest is going on right now, and lots of people have come all across the world to talk with other people. It's a commonality. When you're in a room, what do you talk about? Commonality, sports, golf. The NFT projects that have been able to capture the sense of being in commonality have done really well. The second thing that's so important outside of sense of community, which is what they talked about, is the team. Again, for us, there's nothing new under the sun, right? So what do you do in the traditional space when you're thinking about investing in a stock? You look at the management company. Who's on the management company? What does the board of directors look like? What is their history? What is their experience? Are they transparent when things don't go well? If they missed earnings, is there a reason that's logical? Do they fess up to it, if you will, and talk about how they're going to make it improve moving forward? Apply that concept to an NFT project. The team, do they have a roadmap? Have they acted flawlessly on the roadmap, historically speaking? Do they have an idea of how they're going to create value for the current users? You know, one of the most important things I would say for evaluating the team as we think about it is, have they been transparent about the use of funds from the original drop? There are so many pump and dump scams out there where there was no roadmap, there was no transparency for the people that were looking to support this community. They thought there was. It gets dropped, and boom, the creators are gone. So the best projects have teams that have roadmaps, that they're following, they're transparent about where the funds are going, and it's a continuous feedback loop, right? If people feel a sense of being to a particular project, you have a team that has shown they're able to execute, and they have a roadmap of where they're going to take the group. More people join the system, hopefully they exhibit positive returns, more people, and it's a positive feed loop, and it overall makes a successful project. So we're running out of time here. Are there any concluding remarks, Joanna and James, that you guys want to leave the audience with?
Yeah, one last thing I want to say is we are still at very, very early stage at the crypto industry, especially on the NFT side. So it's actually still a pretty good time for people to learning more about it and try to invest into it. I think you will get very, very good returns in the next bull run.
Yeah, I would say just prepare your money and just prepare to buy the dip in the next a couple of months.
Yeah, I would echo that. I think I would be remiss to not acknowledge we've obviously seen a big drop over the last 2, 3, 4, 5 weeks, both in the digital asset space and in the NFT marketplace. And a lot of people have lost a lot of money. It's important to remember we're still operating in a relatively unregulated market. I believe eventually it will come, and I believe we're going to need thoughtful, meaningful, responsible regulation to build a foundation of stone upon which we can have long-lasting value. So if you're one of those people that has been hurt, or maybe you want to be in the space, but you're afraid to be in this space now because of what we've seen, reach out to me, talk to me. We, of course, would love to have you be a limited partner because we're trying to apply risk management and diversification in a space that otherwise seems crazy. And the studies show that we're all human. So if I'm investing my own money, I'm more likely to be emotional than if I give it to an active manager who I can trust. And those studies show that, let's say I put money into, let's just use Bitcoin as an example. Actual investors only get 30% return if Bitcoin goes up 100%. Why? Because human emotions, we tend to get in too late and we tend to exit too early. But if you set that aside, kind of take the emotion out of it, have someone that you can trust, there's an opportunity there. That doesn't mean that not everybody can manage their own money, but just don't let what we've experienced over the last 2, 3, 4 weeks really let you give up hope on the real value that NFTs and the broader digital asset space will eventually bring to society over the next 2, 3 years. Just think about what's the most thoughtful way for you to have your money in the market.
All right.
And don't
Thank
hesitate
you.
to reach out to the three of us.
Thank you.